You think now's the time to buy international equities. With what is happening with China and the United States in mind, why does that particular case still add up?
Well, first of all, equities are a long-term investment, and there is a lot of politics in this dispute. I mean, we have now 1.5 million confirmed cases in the United States. We've got 90,000 people dead. This thing has plunged the U.S. economy into recession, and so the administration wants to, and people in general want to get angry with somebody, and the Chinese are a perfect target because, after all, it did start in Wuhan. And so I think this is what's motivating this. This is not about if you've got the global economy in recession, the last thing you need is an escalation of a trade war. Really, the last thing you need. But this is about political blame and diverting attention, and I think that's really what this is about. But it's 6 months to the election, and after the election, whoever wins the election, the calculus changes. Then it'll be less about trying to find political scapegoats. It'll be more about trying to find a way to get the U.S. economy and global economy back up and to speed. And so, from a long-term perspective, I don't think this is as important as it seems right now.
Some people might make the case, David, that if you start to repatriate supply chains and you provide aid for companies to do so, that may well stimulate the domestic economy. Do you not see the argument there?
It will a little bit, but it's. I think that clearly we have a national security need for basic PPE, syringes, masks, and so forth. But that's not exactly high-tech investment. We've already got a big pharmaceutical industry in the United States, and of course that should continue to grow. But in terms of the 20 to 30 million jobs that have been lost, it's not a big deal. Moreover, the United States probably isn't in the long run going to be a big low-wage manufacturing center, nor should it be. Global trade does work, but the problem is that global politics get in the way.
So walk me through the argument to be constructive on international equities in the environment we're in right now, David.
Sure. Well, if you go back before the pandemic, it already looked like U.S. equities were expensive relative to the rest of the world. If you look at the ACWI ex-U.S., which is all the stocks outside the United States, they normally sell at about a 10% discount to the U.S. in terms of PE ratio. Right now, they're selling at a 30% discount, so already cheap. The dollar is already too high. We're running a big trade deficit. It's probably going to get bigger over the next few years because the dollar is too high. But also, if you think about this pandemic, whatever you think about the way the Chinese handled this at the start, and there's a lot of blame to be accrued there. It looks like East Asia is coming out of this faster. Japan looks like they've almost got this under control. South Korea has. Australia, New Zealand, Taiwan. China itself claims to have it under control. So it could be that East Asia comes out of this faster. It may be that Europe does a better job. Maybe they're a little bit more disciplined in their lockdown than we are. We may be the last out of this thing. So, normally you think about the U.S. as a safe haven in time of crisis. But if we actually have a harder time getting out of this than anybody else, then that doesn't necessarily follow.
The other argument would be that we have the big defensive companies that have done terrifically well through much of this year here in the United States. So would it be correct if I characterize the trade as following? You also have to believe for international equities to work, you have to believe the more cyclical element of this equity market has to work too. Would that be a fair characterization, David?
Yeah, I think that probably is, particularly when it comes to emerging markets. We've got to see the other side of this thing at some stage. But I think we will. We're making progress in the vaccine on multiple fronts. They're making progress in treatments. It is affecting, the social distancing is affecting everybody. And as I said, I think it's going to affect the U.S. economy in the end, probably more than anybody. But once we're past this, and I don't think we're not talking about 2022. I think in the middle of 2021, we're going to see this economy rev up, and I think that's true of the global economy. And yes, I think under normalization, with the global economy revving up, the dollar ought to come down. International stocks ought to beat U.S. stocks, particularly emerging market stocks ought to beat U.S. stocks. And I think it's just important to make sure that people are not underweight that sector, because a lot of people are, or underweight international equities overall.